Now, I'm not joking when I say the future of altcoins and again, crypto at large might be a little bit scary here, especially if you are new. This is going to be a bit of a shock because we all knew coming into this bull run that there was a guarantee almost of money. Let's face it, we all thought there was a guarantee of life-changing wealth. We all kind of accepted the risks in terms of these 10, 20, 30% pullbacks, but the really big problem here is that these pullbacks in this current situation we're in right now is paired with major macro news that many of us simply do not understand. And as it may be in human nature, when you don't understand something, you naturally fear it more. So in this video, I want to go over particularly some great correlations here in the last bull run with what I think will play out here in the macro over the next few months and what that actually did to altcoins. Basically, what I'm trying to say is, I think what I've pulled up here for altcoins may play out again, and there is a silver lining. There is we will get better. It will be better off, but we might have to go through some unfortunate and dark times to get there. Now, first of all, as you all know, this is the 4-year crypto cycle, right? There's typically euphoria, a bear market, consolidation at the bottom, and then there's the start of the next bull run, then euphoria, and so on. Now, of course, we all knew this coming into the cycle, as well as the risks involved as well. Everyone and their mother's been talking about the potential downsides here in pullbacks. But like I said, since we have correlated so much here to macro equity markets as well as cycles, I'm talking about business cycles, liquidity cycles, and so on, now we are completely at the whim of whatever happens to things like the S&P, like I've pulled up here, right? What happens to the NASDAQ, right? What happens to the Invesco's QQQ, for example, right? Or tech stocks. What happens in equity stocks and therefore how they are impacted by larger cycles, we too are as well. Crypto and Bitcoin are, let's just call them, commodities, they're digital cash, whatever you want to say, right? But let's just say commodities for simplicity's sake. They're digital commodities in a worldwide setting. So whatever happens in the world, people around the world are going to buy and sell depending on that. So if conditions are very favorable, if conditions are good, people are going to be inclined to buy, and they're going to be inclined to buy further down the risk curve. Okay, but if they're not, if the markets right now, thanks to the trade wars and the war in Ukraine, Russia, okay, and thanks to, of course, again, all of the disputes happening amongst the leaders of the world now, people are up in arms, people are scared. Obviously, you can see here, markets are worried, and Bitcoin, of course, is almost an extension of the traditional larger equity markets as well. That is what is pulling us down. And you shouldn't have to need me to tell you that. I think what's been a glaring evidence of this is the fact that we've had so much bullish news in the last 3 months with literally the adoption of grandfather Bitcoin, on a federal and state level. And yet we have essentially peaked at that point. That was essentially the top. And now we've come down. So what does this all mean? People are saying, well, that's a top signal. And yes, it definitely is a signal that we are running out of steam here. But many argue, Kyron, we never really gained steam. And I can say from experience, we never really gained steam, right? Back from 2021, 2018, I mean, what's happened here, even if we count the lows in 2022, right, Bitcoin being about $18,000 to $108,000, I mean, that's great, but that's definitely not a bull run, especially for altcoins. What's different? And again, let me remind you, it's because we are so synchronized to the macro markets. And so let me explain to you very briefly before moving into those charts here, why I think we're going to have some short-term volatility here, thanks to the synchronization with these macro markets and macro cycles. It's because, of course, mainly to do with the trade wars. Now, this can flip on and off like a light bulb in an instant. It can be super bearish right now, and then all of a sudden, all those tariffs go away overnight in an announcement, and things are better again, and everyone's happy. So there is a situation where what I'm about to say here does not play out. But given from what I've been observing from the economists around the world, and by the way, I probably should preface this, that you should never really look to listen to one single economist. Because from what I've gathered from listening to these experts is they actually are disagreeing with one another themselves. Like they don't really agree on what's possibly going to happen. Everyone's got opinions and everyone doesn't really know what's going to happen. So I'm just kind of pulsing what I think may possibly play out here. And that's the fact that Trump is essentially trying to reduce interest rates because lower interest rates spruces up the economy because people want to borrow, people want to lend or can lend. And then that, of course, means people start buying, more jobs are created because of more buying, and it just, springs up the economy. But right now, interest rates in the United States are way too high, at least too high for Trump's liking. So what he's trying to do is bring them down. And the first way he tried to bring them down was by telling the Fed, particularly Jay Powell, that can you please move them down, Mr. Powell? I want them to be lower, all right? I want my sort of 4 years in office to be a great one, all right? And he's essentially said no, right? He said, no, rates are staying high for all the various reasons. And so Trump got pissed. And so I believe that this is option B. This is Trump saying, well, we'll play it the hard way then. It's essentially Trump saying that if you're not going to move them down yourself, I'm going to make the markets and therefore everyone so damn scared of a recession or so damn scared of uncertainty, right? Because markets love certainty, that everyone's not going to want to spend money. The market's going to slow down, and therefore you're going to be forced to pull down interest rates. Now, that's one theory, and there's a lot of variables that go into it, and I'm by no means an economist. I'm just, again, sort of pulsing what the experts are saying and trying to simplify it. We also have a situation where the US is about to unravel and have about $7 trillion worth of its debt refinanced. They have to refinance, okay? What that means is just like you'd get a home loan, okay? And your home loan, you lock that term in for a while, you get a home, you owe $100,000 on it, or pretty much a lot more than that, maybe 3 or 4 times that. But eventually, that term you lock the interest rate in for comes to maturity. It unlocks, and then you have the tough decision of having to lock it in again for a period of time at different rates. It depends on whatever happens in the future, right? So this is the exact same thing that's happening right now, but on a federal level with not a couple $100,000 or $1 million, but $7 trillion. Now, let me tell you right now, even a small little jump, a 5 basis point jump in an interest rate is going to make a big difference to, well, the taxpayer, right? That's the whole part of why Trump's got Doge trying to, weed out corruption and figure out ways to save the taxpayer more money. It's to, of course, stop some of these wasteful spending things. Now, you can imagine his, of course, attitude towards making sure that rates are as low as possible for this debt. So he's got 2, I think, big incentives. And people have said to me, well, Kyron, it doesn't make much sense because he said, don't look at the stock market. He's not worried about short-term price action and all the rest of it. I can damn well tell you right now, as far as what I've seen, Trump is pretty committed to making okay, we say crypto here, but does he know much about crypto? Maybe. At least the stock market, right? During his 4-year term here, like prosperous. He wants it to be prosperous. He said it before. He said you're gonna get sick of winning, basically. And he's also said low interest rates mean more people make money. So he is committed to, making that stock market, making just any equity market overall, like, better, right? But of course, to get where he needs to be to lower interest rates, to make a situation where you and I would be happy about all this. So like on here, for example, right, to make us happy, he's going to have to try to lower interest rates, okay? They are pretty high right now. Now, the reason I pull this chart here up is because interest rates can fall very quickly. Now, notice at this time over here, this was actually COVID. Guys, this was COVID in 2020, early 2020. And you can see Bitcoin here in orange and the S&P 500 here in this black line, okay? In a single month, we dropped quite a few basis points. We went from what's this, about 1.5% interest down to 0.66. So we essentially halved. And then from there, we pretty much halved again. So it was a massive, massive drop very suddenly in a couple months here. And I'm not trying to say that, of course, we're going to have a COVID level event. That was a black swan event. That was sudden. That was, of course, the Fed freaking out and being quite scared, obviously trying to reduce interest rates, spur up the economy. But again, that's sort of what Trump wants now. That's sort of what he wants. And we do have a deadline. I mean, June is when he has to refinance this $7 trillion debt. Plus, the Federal Reserve here in this color, in this blue line, they are unwinding their balance sheets. You can see they're pretty much neutral right now, or at least they look neutral from a distance. But they will stop QT in June. We know that, okay? So, again, I'm not saying this will happen, but if we have a reason, again, I don't want to even say the R word, but like a minor recession, something that pulls us down insanely quickly, okay, pulls all these equity markets down, of course, therefore scaring the Fed, dropping interest rates, and maybe even jumping into QE. I mean, that's the perfect storm that we had in the last cycle to spring us up. Altcoins will only pump when we do have this happen, when we do have people going, we got a shitload of money. Everyone's got more money. Everyone's buying. Everyone's lending. Let's just throw money into crypto. At the end of the day, Bitcoin and crypto are global assets. They belong to no one nation, nor do they belong to any group of nations. It's global. So that's why it's so imperative to look at global liquidity. The more money there is around the world, the more chance that flows into Bitcoin. That doesn't mean altcoins, by the way. I think altcoins do depend on some more micro level things like this, which is the ISM's PMI index. This is, I do believe, why particularly also Bitcoin, but alts haven't really taken off, is because we haven't had a large surge in essentially the US economy. A lot of money comes through the US. So you can see global liquidity here has a turning point around mid this month to around the start of April. So you can see we kind of do trend with it. This is a very good sign. So also looking to this is quite important as well, actually, because you can notice here this synchronization to Bitcoin over the course of time. These green dots here are the all-time highs for Bitcoin each cycle. And you can see just how much better it gets at actually timing the exact top. And also the bottoms as well, guys. These get pretty close every single time. And again, the reason why I say that we haven't actually had an alt season because of this is because when you survey businesses and the businesses say that not many people are spending money, they're in contraction. Deliveries are fast, meaning that there's no oversupply or over demand to deliver things. And when you have inventory beginning to build and build, that is a sign people don't want to spend money, let alone want to spend money, of course, on bloody altcoins. That's why I've highlighted here these green boxes. These green boxes are that last 12 months of the 4-year cycle, which we all know as alt season. So I believe this is one of the main drivers into alt season, and global liquidity can continue going up. That doesn't mean, though, that people are willing to go the extra mile and spend them extra money on, of course, alts. Alts, guys, you got to understand, it's complete gambling, right? People know it as complete gambling, particularly meme coins, okay? So they're not willing to jump into it unless they're spending money in the economy. Think about it. You go into an IKEA store, okay, and you have a surplus of money, so you start buying anything and everything. You start buying unnecessary stuff. It happens to the best of us, right? You go into a supermarket and you walk out with more than what you wanted. That only happens when you have a surplus of cash. The same thing is applied to digital fake money. That's cryptocurrency. That's particularly altcoins. So this is what we're waiting for again, I believe, for alts to really take off. Again, this is just the US cycle. We have to observe many more than this, but it is a great pulse into it because, again, like I said, the United States definitely takes the charge in terms of their overall spending habits in the global economy. So please keep your eyes on a few very important indicators coming up here in the coming days. We have the CPI coming out, which is obviously very important to assess because this is obviously inflation. This will allow the Fed to assess what they need to do next, as well as PPI. And a little bit further down, we of course have wherever it is the FOMC meeting coming up. Here it is. So keep these dates in mind, 20th of March and tomorrow and the following day for CPI and PPI. Now, regarding what may happen to altcoins, I'll be very quick here. It's important to note at the big C word, right? COVID in the last cycle, what we actually found ETH and all the other altcoins I'll show you today do. And again, the reason why I'm comparing that is just because that is essentially what I think will need to kind of happen here in the short term in order to really do what Trump's trying to do here. Maybe not to the same degree, right? We're not going to have a COVID level event and it's not going to be likely this massive shoot down in like a month or two and then a massive shoot up again. This could be much more drawn out and this may not have similar effects. But when you actually have a look at, again, ETH and some of the other altcoins here being already down 57% from their recent highs, considering COVID had from the highs about 70 to 80%, we are bordering on that line already, guys. We are there. And also fear and greed back then was, around about 7 to 23, which is where we are ranging ourselves right now, extreme fear. Okay, so you can see here we actually dropped down from the highs in ETH about 70%. And what I want to note here, what this red box represents is a time in which everyone that pretty much bought before was underwater. So when we broke out of this red line, being about 34 days for ETH here, at this moment, we had everyone buying before, pretty much, roughly speaking, back break even again. So it's a very important thing for me to assess this, because we want to see roughly how long it will take for that to happen if this were to play out roughly again this time. But most shockingly, actually, that from the actual high to the next high, so, kind of how long it took for ETH to go back up here from about $300 to $300 over here, it took it about 161 days. So even back then, which again, arguably it was a much more chaotic, instant down, and again, instant or semi-instant, sort of a monetary policy switch that helped the economy come back to life again, then we could be, in for a lot longer this time around, because I think it's going to be much more induced. It'll be much more forced. at least from my expectations, right? We can also see here a 17x did occur from ETH from there, from the highs, not from down here, from the highs. So like I said, there is a chance that we come out of this in a very good position. Same thing as you can see here, ETH from the recent highs has plummeted 57%. All right, we are now down under $2,000, still at $1,900, which is just crazy to me. And I've put this red box here because I think most people on average, either lower or higher, would roughly be here right now. So we are below the average buy-in cost, at least anyone buying from around back in, early 24 to late 2023. Anyone before that's probably in profit still, right? So this is an important line because I do think if we go down lower, it's going to obviously be a situation like this where it may take some time before we break above that number again. And then we eventually have, hopefully, some pretty good multiples. Chainlink was the same thing, right? Chainlink actually fell down 70% as well. And you can see here it took 24 days before we broke out to a number in which most people buying before this sort of hump and crash were back break even. Okay, that's a number I think a lot of us are eyeing off, is the break even number. We can see here it took 109 days in order for it to come back up to that sort of local high, not the wick, the local high, and it went on to further 11x from there. Right here you can see we are now in the zone in which we've erased anyone buying since about late 2024. But if we go back in time, you can see a lot of people are in profit still. HBAR over here was 317 days, one of the most jaw-dropping times here. You would have been underwater for a whole 12 months if you did buy the top, but most people would have been back in profit somewhere about over here. Okay, so this took about 72 days, so this was much longer. Of course, it was a much smaller coin back then, but it still went on to 9x from these highs. So if you bought the highs, you would have been still well off. That's pretty much the equivalent here of buying at 40 cents and HBAR going on and pretty much going to $4, right? You still get a 10x if you get the bottom to the top, essentially. You can see we have a long way to still go here on HBAR. HBAR's held up quite nicely, which is what I like to see. It does have to around 4 to 5 cents for it to fall, for it to be any sort of worry, which I guess is in a way kind of concerning as well, because that means that we do have a lot more to fall if we do break through some key support levels. But either way, again, it is good. It is holding up quite high. And lastly, Binance Chain. The reason I added this was because it did some major multiples in the last cycle. It actually did a 26x from after breaking through to the top here, which is just incredible. Buyers down here made a lot of money, and they would have been holding for quite a while. It was about 114 days before these people, on average before it, actually were break even. So obviously patience sometimes is the true winner here, and that's kind of what I'm trying to point out, is that while these coins might be down from you buying up here, like the average is, or maybe even did buy the tops, there is a good chance that if we do have a bull run, if we do have an alt season, things will get better. But like you can see, it can take 100 days, so it can be like half a year. It could even be a full entire year before we get into a position again where things are actually good. The economy is well, and we're obviously in expansion. These tariffs are maybe possibly finished or at least digested. We have ideally the war in Ukraine, Russia stopped. Things can switch very quickly here. We don't know what is happening behind the scenes, but all I can say, the best thing we can do is prepare for the worst, expect the best. So that's what I'll leave it with you here, guys. I hope you guys all pretty much work everything out in your own way. Obviously, we're all going through our own struggles and situations in real life. So I do mean, it truly sincerely when I say I wish you well, and I'll talk to you all tomorrow. Take good care. Bye-bye.